Well, welcome to Bitcoin Liberty Live, episode 3. I'm Fritz with Satoshi's Militia. I've got Daniel here with Tin Money, and Daniel is writing a book, The Great Realignment, about the long-term view on Bitcoin's effects on the macro and everyone individually, which has been quite fascinating as I read it. Just recently, we were talking about, you can always see the price of Bitcoin in terms of US dollars, and that's an easy way to view what Bitcoin is worth and how you translate it into your day-to-day thinking of money. And so the DCA approach, the dollar cost averaging, is something that I've done for a long time, and it's an easy way to not overthink strategies or operate on your emotions or overthink things when you just want to have skin in the game and let it be and not worry about the price so much when you see the bigger picture. I saw an interesting article a couple of months ago, and I wish I could remember who put it up there, but it was a really good, highly analytical comparison statistics on outcomes based on dollar cost averaging as compared to lump sum buys when you, one, either have the money, or two, when, say, the price is low, without over analyzing predictions on is it going to go up? Is it going to go down? You can get really tied up in strategy there. But that basically the outcome was that people who lump sum bought, on average, the outcomes were fairly significantly better. So the idea is you wait till payday, you get paid semi-monthly or monthly, and when that comes through, you smash buy with what you got at the time, given that overall time is in your favor with Bitcoin. Now, you can also apply some thinking and strategy to upward and downward trends, which you have had a really great model that's worked for you for many years as far as how to predict and watch that. So for those that are perhaps more of a swing trader, perhaps you can speak to that strategy and what's worked for you.
Sure, man. And what you were talking about, I actually saw that similar research a ways back. What they were talking about with the lump sum buys was like, if you had like 50 grand sitting around or something like that, like the question I think they posed is, should you smash buy 50 grand or should you spread that out over like a DCA, like monthly or weekly or daily sort of buys?
Right.
And the smash buy thing, like up front, if you just bought like one whole Bitcoin right out of the gate versus having, like whatever, 10 micro buys of 5,000 each or 6,000 each or whatever it was. So the, like the DCA approach is generally, you're going to outperform most traders if you just DCA. Like most traders, they'll, on short time horizons, those guys can outperform the market, but on long enough time horizons, all it takes is a couple of bad trades and their P&Ls are shot to hell. And what I wanted to talk about a little bit today is is sort of the trading, like what trading can actually look like in a sort of, I don't know how you frame it, like without the trading part, you know what I'm saying? Like if you just use the long entry logic, you can get better DCA buys. Like if you're just buying on the regular and you're just planning on stacking and holding, and you don't want to just, there's never a point in time when you're thinking about selling. I was thinking maybe I could just kind of show folks some like rudimentary trading stuff because I see a lot on Twitter, people are just sort of befuddled by price action. They just kind of go, I don't know, it price sank, so I bought stuff, and then 2 weeks later price sinks again. Mm-hmm. And like, oh dang it, I shouldn't have bought that last dip because now there's a deeper dip and I could have got more Bitcoin. And what I'm going to show is a way that you can kind of tamp some of that down and you can get better entry points. Like during the bear market, my trading system that I use, it's pretty simple, it's pretty rudimentary, but it's also based on research and evidence, so it's not just some rudimentary thing I just dreamed up. And that was the thing that got me an entry at 16.8. Like I know the market bottomed at 15.5, but the entry point I got for a pretty big smash buy at that time, or at least big for me anyway, I got a 16.8 entry point. And so, like watching price action now is sort of chill because like my average purchase price is, you know, probably in the 20s or 30s. So it's not, you know, like none of this price action even phases me. I just kind of wait for opportune times to add to my bags.
Mm-hmm.
So I'll see if I can share my screen here. I don't know. I don't have multiple monitors.
And rarely do you feel good when you're analyzing and swing trading. What I've found personally, it's like, you know, you buy and it goes a little down and you're just watching it. You can't help but watch it then, you know, within hours to the next day. And you buy and it goes a little down, you're like, Ugh. Or if you're, you know, if you ever were to sell and it goes up, you're like, Ugh. And there's just all these scenarios where I would almost get superstitious. Well, it's like in my mind to be like, you know, if I'm about to buy Bitcoin, even when I'm thinking it's a really good time, I know that that's a call to the universe for the price to go down. And I just have it in my mind, if I'm going to buy, it's going to go down. And I'm just braced for the braced for the universe trying to tell me to hold my horses. And so I'm just like, whatever. Don't look at the price. You know, I either lump sum buy when I have the resources to do that, or
Right.
I've DCA'd. And in any case, it's like I don't care about the price because I'm not selling. I'm just accumulating, stacking
Right.
sats, and then I have to remember also stay humble. So
Exactly. Well, here, I think I finally got this thing so I can share the screen. Just let me know if you can see it. Are you able to see the TradingView screen right now?
I do see it. Yep.
Okay, perfect. So I'm going to click over here. Now, the thing is, people get super confused, and there's this thing right here. Can you see this pattern index?
Oh,
So-
yep, there it is.
This pattern index, you'll hear people talk about like bull flags or, you know, like head and shoulders patterns and all this kind of stuff. I bring this website up because this is the list of all the possible patterns that you could recognize, quote unquote. And it's silly, you know what I'm saying? Like, this is literally astrology. There's no evidence behind anything with chart pattern reading. So you see someone, oh, this is a bull flag, this is a head and shoulders top, this is a cup and handle formation, this is an even atom double bottom, this is a random shape volume pattern. I mean, it's all just nonsense, right? And you may as well be talking about astrology when you're doing that kind of stuff. What I can tell you is there is some research for things like these lines I've drawn here on the chart are support and resistance. And support and resistance means, generally speaking, at places where price either reverses or is supported by further action. Like you can see here, price reversed, went down, came back up, broke through that, what would have been called resistance, and then broke down below. But then when it came back, it bounced right here, and you can call that sort of rough support. These tend to coalesce. If you'll notice here, that's right around $40,000. They tend to coalesce around whole numbers, 40,000, 50,000, 70,000, things like that. As I've drawn some of these other lines out, you can see that they correspond to like previous all-time highs that if you look at like the 2018 top, you can see it functioned as resistance here in 2020. Price came up onto that price line, hit it, bounced down, and then came back up. But as you can see here, as price was dropping down, it bounced right along that same price line because that is like a psychological support for the market. And then it finally broke down when it crossed through here. So that means it lost price support, and now it's become price resistance when it goes below it. Again, here's a local top, and as you can see, it forms resistance here. It came down, bounced off of support, and then broke through, and then that became support. And so that's the rough idea behind price support and resistance, as in places where prices naturally coalesce and places where prices tend to rebound. And there is actual research that backs this up, and it's based on market psychology, right? So that's one of the reasons I use support and resistance lines. So there's only a handful of indicators that I use. Like I use the RSI. This is the relative strength index. What this here is the 70 line, and then there's a line down here called the 30 line. And the way most people use this indicator is they go, when it's above 70, that means the market is overbought. There's too many people who have bought the market. When it's below 30, they go, oh, too many people have sold the market. It's oversold. I don't use that at all. I just throw that out completely. What I use is the midline, a 50 line, and midline crosses are important because that tells you the relative strength. Is it more buying or more selling that's occurring? When this midline cross happens, that's a big indicator for me. And then the last thing I use are moving averages, and there's actual evidentiary support for using moving averages. The one that I favor for most of my price entries, like if I'm going to decide to do a buy, I use these two lines right here. That yellow line is the 9 exponential moving average, and the purple line is an 18 period simple moving average. And the rough idea behind this is when the shorter time frame crosses over the longer time frame going down, that's a time that you would ordinarily you'd be going short if you were trading. For me, this just means it's not a good time to buy. But when it flips over, where the 9 period exponential moving average crosses above the 18 period simple moving average, that is typically a time when you might start thinking about buying. If that corresponds with a cross above the 50 line, then you actually have a good entry. You have a higher probability the price is going to continue on the uptrend than you do on the down, right?
Yeah.
And so right now, what we're looking at is that short period, the 9 EMA has crossed below this 18 period SMA, the simple moving average, and you can see it's starting to break down below the 50. And so it's chopping in and out a little bit here. And so none of these are really solid buys. Like right here, people would be saying, hey, it's 61,000, you should buy that dip. And I go, that's not a great buying opportunity yet. And as you see it rebound, you can kind of go, okay, and you can see the RSI is going up. You go, oh, maybe this was a good time to buy. Maybe that dip was a good time to buy. But then you can see it break down again. So now you're getting into what's called chop. The last thing I'll talk about is market structure. And basic market structure also has evidentiary support, as in if you see what we can see right here are a series of, that's a high, that's a low, that's a lower high, meaning that high point in the market is lower than the last one. And now we've got a lower low. And that's basic market structure. Higher highs and higher lows mean an upward trend. Lower highs, lower lows mean a downward trend. And so you typically don't want to be buying in downtrends. You want to start buying when it's in an uptrend. And as you can see, like I nibbled on this dip right here. And like nibbling here wouldn't be bad either, but you don't want to go all in here. If you've got, like, let's say $1,000 sitting in the bank, maybe you buy a $200 spot buy there, and then rides up and comes back down. You go, okay, well, that wasn't that great. And like right here, I did a spot buy of about $500, just like, okay, well, I'll just catch the dip and let's see if it's going to continue. Because none of this is predictive. You can't predict the future. No one can predict the future. But what I can tell you is right now, I'm leaving some cash in hand, waiting, dry powder, because we are below the 50 line and the short-term EMA is below the longer-term EMA. So right now I go, none of these things I really want to be buying. I'll take little nibbles on some of these dips, but I'm certainly not going to dump all my money into it. Sooner or later, this is going to bottom out, and those indicators are going to flip. This thing is going to come above the 50. That will be a good time to buy. But what I can tell you right now, just based on the price action, the market structure is telling you you've got a higher high, or you've got a high and then a low, then a lower high, lower low. That tells you the market is in decline. The relative strength index is below the 50 line, which also tells you on a relative basis there are more people selling than buying. And the average buys, there are more sells than buys happening right now, is what these two lines are telling you. So just in a very rudimentary sense, if you had $5,000 sitting here, this is not a great time to buy. You want to keep waiting. The only reason to do this is when you do your buy, you can theoretically stack more Bitcoin because you're going to be getting a lower price, if that makes sense.
That's what
if you dump all your dry powder here and price dumps all the way back to 40 grand, which is the next logical, legitimate, very well-established area of support and resistance, you go, man, I wish I would have bought 40 grand instead of at 58 when I thought that was a great time because I bought the dip. And this can just give a little bit more coherence to the timing of your buys. Is all you're looking to do is to try and maximize the probability that your buys are going to be opportune, rather than going through what you were just talking about, Fritz, which is you buy something and then all of a sudden it's like, oh, next day it drops another $5,000 or something. You're like, oh, psychologically, I think that can be a little demoralizing. And that takes a lot more of that, like, just stay humble, just keep stacking, don't worry about it. Exactly. But if you have a system similar to this, you can feel a lot better about your buys. Like right here, if you had bought this one, you go, and then price goes up the next day, you go, hey, that was awesome. That was a great buy. Because I didn't buy here and then go here. You bought here and went here, if that makes sense, right?
When on the bottom graph, that shows where it's crossed the 50% and it's going up. And that's
correct.
So you're a little behind the lowest low.
Correct.
But as it goes up, yep, you didn't get lucky enough to just grab that, and with the wisdom of being able to see the future. But you
correct.
Caught it as it was going up, but before the large support really happened.
Correct. So what you can see, if you're thinking of this like a trader would think of it, and I'm only doing this to just add my bags. I do not sell anymore. I don't swing trade this stuff. All I do is stack. But what I'm doing with these indicators now is I'm just using them for opportune entry points to add to my stack. As in, I don't want to add here blindly. I don't want to just add here blindly. I go, is this a good time to buy with the money that I have available? And like, this would have been a great entry right here. You can see we're crossing above the 50 line. These indicators are crossing as well. So right here, you go, you got to cross, and then price appreciates. Whereas if you're buying here just blindly on a DCA, you go, well, I don't know. I don't have any thought behind this whatsoever. I just buy every 2 weeks. You go, well, a week later, 2 weeks later, 2 months later, your price, psychologically, you've lost a lot of fiat, number went down, and that can sometimes be tough. It doesn't really faze me because I know the long-term potential of what Bitcoin's going to be, and so it's not that big of a deal, but I also like stacking more sats when I can. And so as you can see, rather than blindly buying here, it would have been better to wait a couple of months and take all of that money, all that fiat that you'd saved, and make a purchase here, because you're getting an entry at 26.8 rather than buying a local top at 31.5, right?
Yeah.
But here, with this cross, you have a much higher probability that the price is going to continue going up, and it did. If you did a smash buy here, instead of DCA, 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 boom, DCA, 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 boom, if you just went, okay, here's a good buy. I'm not going to buy it, not going to buy it, not going to buy it. Here's a good buy. Not going to buy it, not going to buy it. Here's a good buy. Not going to buy it, not going to buy it. And right now, you just wait. You go, okay, wait. And if it drops down to like 47 or something like that, because there is a little bit of support here around the 52 mark, you could go, and I say there's a little bit of support because you can see this is where price came up and then crested for a minute, and it kind of bounced around on that before it broke through and went up, right? Mm-hmm. So that's what you might call local support. The further back, the more of these bounces you have back in time, the stronger the support and resistance. As you can see, this goes all the way back to 2021. You can see price ran right into that wall at 40,000, dumped immediately back to 30,000, smashed through, and then dumped right back through it again, and then whacked into it again before it broke through, and then it bounced off of it, and then it sort of broke through and came up, and so you can see it bouncing around this price, and then it smashed all the way back. So this gives you a pretty good indicator that the 40,000 range is pretty solid support and resistance. Like, price tends to move a lot around that area. It's not precisely, I know there's just a line drawn here, but you could just kind of draw a box around this and go, this is a general area of support and resistance. And as you can see, if you fast forward 2 years later, 3 years later, price is again coalescing around that same thing. It smashed through it, and then it bounced around, and then it took off from there again. And that's the sort of psychology, that's the market psychology of price support and resistance. And what I can tell you is there is some support right here at the 52. You can see where price kind of bounced around a little bit here. So there's legitimate support and resistance at 52. And if you're sort of watching this trend and you're watching the lower highs and lower lows, you kind of go, well, there's a pretty strong possibility it's going to get down to 52, and you might catch a bounce here. But if you have the choice between buying here or buying here, you're going to go, well, I'd much prefer to buy at 52 than at 62, right?
Yeah.
But if price turns around and 60 actually becomes a support, which it very well could be, there's nothing saying this can't become support, then you'll see it, because you'll see the average price is going to change. The short-term moving average is going to move above the long-term moving average, and you'll see a cross on the 50. And once that happens, maybe you're buying at 63 or 64, but again, you can't predict the future. So you're going to have a higher probability if you pick up a buy here that this continues on and goes up to the next into price discovery mode, versus watching it tank down to 52 and then going, oh shoot, man, I could have just waited a couple weeks and stacked an extra 100,000 Satoshis or whatever. So that's the sort of general idea behind this. I'm always happy to help people kind of understand this. I actually wrote an entire article about it. It's on my Medium webpage. But that was also back when I was shitcoining and doing swing trading and things like that.
Yeah.
But in terms of putting some process into your DCAing and when you DCA and how you allocate those precious fiat resources that you want to use to stack as many sats as possible, this is a way to do it, where you have some metrics and some coherence to what it is that you're doing. So,
and it goes without saying, obviously, we're not financial advisors. We're not giving financial advice here. These are our personal strategies, and my approach to it is, never selling Bitcoin, staying humble and stacking sats. As a troglodyte, it's hard for me to, legitimately, I just don't have the time always to dive into the graphs, think about everything. I've got a little dry powder and fiat saved up, and I know I'm buying Bitcoin. It's just kind of a matter of, do I just smash buy it when I have it because I don't have time to think about it, and I don't have a short time preference. I don't have a high time preference. I'm thinking long term all the time. I'm aiming for low time preference. So I can kind of rest assured that I don't care what the price is right now, because it's under $1 million right now, which sounds ridiculous. At the same time, if I can get it, I get it. Don't look at it. An hour later, I'll go back and I'll look at the price. I can't help myself. The psychology, the human psychology is there. If I buy, I just am out of sheer curiosity. I want to know how I'm doing, even as I don't care. We've all had that experience as well, where both of us are constantly orange pilling everyone we can. We talk about it, we educate, we evangelize, we're pro Bitcoin. Get off zero. Or if you have some within your means, within your financial plans, stack your sats. Just have some skin in the game, whatever that means to you. We've all had that experience where we orange pill somebody. This happened to me a couple weeks ago. As the price was just starting to come down steadily for a little while, I had orange pilled somebody and was showing them what I do. I referred them on mechanisms to get in and at their level of interest get off zero. And then the price for them goes down relatively largely. It was at, it's trying to get back up to 70,000, and that, what happened? Iran attacks Israel, and in one day we both had this experience where it dropped from like 68K to 62K in like an hour, and it was ridiculous. And so that hits you, and you're like, oh shit, here I am orange pilling someone. They're all excited, and in their minds, they just lost money. And what I always reiterate is, don't worry about the price day to day or short term. You're in it as an investment or a treasury for yourself personally, like generational wealth for the long term. And it's easy to overanalyze. So I've had these talks with people where I get them off zero, and then I can't help but hope the price goes up for their sake, just so they don't get kind of FUD. Have you run into that kind of a situation?
Oh, totally. And that's sort of the beauty of having to give some background, like I spent a lot of money, and I was spending probably 12 or 14 hours a day watching charts and learning about trading and trading strategies and doing a lot of that like financial research about like what do these things actually work, and because there's a lot of people that BS you on Twitter and whatnot, and they'll post like these big huge wins, and you go, oh, this guy must be a genius. They never post their losses. They'll never show you the true P&Ls of what they're really doing.
There's a bias when people tell their story, yeah, totally.
Yeah. Well, on a long enough time horizon, you'll see them, like most traders are going to revert to the mean. There are very, 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 very select, and I mean like dozens of people that can beat the markets on a consistent basis. One of the most famous of them, I can't remember the guy's name right now, he was one of the first algo traders. He was a mathematician. He worked for NSA and CIA, and he didn't like what was happening in the Vietnam War. And so he went off and became, head of a mathematics department at like Columbia or something like that, and kind of got bored of that, and then came up with this trading algorithm. His whole premise was, I need to beat the market 51% of the time. He needed a 1% advantage, and he ended up making billions. I mean, he was one of the most successful traders of all time on a 1% advantage on some really, really deep statistical probabilities and computer modeling. So if you think you're going to compete with that, zero chance, right? What I can say is, with this strategy, I've probably got, it's probably a 60% hit rate, something like that. I mean, you can get chopped out. And by the time it was all done with my little trading career, I had increased my gains, but I also incurred like a pretty significant capital gains tax from all that stuff. And it ended up not really being worth it. It just stopped making sense, even just to try and increase my BTC holdings. And that was the whole goal, is like I wanted to stack as much BTC as possible. Because like everyone else, I feel late. I'm like, oh man, I've known about this for 15 years, and I just kept not doing the right thing. And now that I'm in it, I want to make sure I get as much as I can with the time I have left on Earth in general. But to your point, when it comes time to like orange pill people and things like that, like I remember walking around work and going like, hey man, at 16.8, going, hey, I just smash bought a lot of Bitcoin. You guys should be getting into Bitcoin right now. And I would always caveat that with like, again, you're correct. It's not financial advice. I can't tell you how to invest your money. I'm not your financial advisor at all. I don't know anything about what you're doing, who you are, how smart you are, anything like that. So if you're watching this and going, that guy told me to, I go, no, this is just what I'm doing and what's worked for me. And it's some things for you to think about that have actual evidentiary support. It's not just some guy that came up with his little custom trading ding-dong idea that he's selling a course on. Because this is free. You just use it or not. It's up to you. And just be aware that trading has a ton of risks. So I don't recommend trading. I just recommend you stay humble, stack sats, however you're comfortable doing that. For me, this is an easier way for me to help ensure for my own psychology that I go, okay, I know that when I'm stacking, I'm getting good buys. And when it comes time to those orange bills, when I told all those people, hey, you should be buying some Bitcoin right now, they go, well, how much is it? I go, it's 16.8. And I say, look, this could easily drop to 12. There's no guarantee. I'm just letting you know, according to my trading principles and according to my, the probabilities that I'm aware of, this looks like a really good time to buy. They go, yeah, Bitcoin, Schmitcoin, whatever. And then next thing you know, like 2 months later, I go, Bitcoin's 22 grand now. And they go, really? I go, yeah. And then, it's 26. And I go, hey, it's 26. This looks like another good time to get in. You might want to consider it now. They go, I don't know about that. And I still have those same warnings. Of course, if you bought right now, it could easily drop back down to 10. I don't know. I can't predict the future. I'm just saying, according to my trading strategy, this looks like a good time to buy. And the next thing you know, it's 32. They go, hey, Bitcoin's 32 grand now. They go, what? And I go, you remember when I was telling you you could have bought it at 16? Like, you could have doubled your money right now. And they go, should I buy now? And I go, maybe hold off for just a second. Then I go, hey, it's 36. This is a good time to buy. And they go, oh, man, I wish I would have bought at 32. And I go, you can't get hung up on that kind of stuff.
Yeah, all the coulda, woulda, shouldas. And then also, they see for some people, it just takes a lot of time of kind of getting Bitcoin as an idea integrated into their concept of, okay, for you, is it a speculative investment, or do you get the big picture and you're going to hodl? There's a spectrum of people. You can always look back, and because of the price of Bitcoin, it's like, oh, I missed out on that. Well, I missed out on that. Okay, well, get off zero. And if you need to treat it as like more of a speculative investment for you, within your means, okay, but why not have a little in there And then you're trying to alleviate that missing out. You don't want to have that just stupid fear of missing out. But if you're just off zero and you have a bit of a plan where you're stacking, and as you see those gains, it's like that slow orange pilling process for people where they start to kind of get it like, oh, okay, I'm thinking long term here. And if you understand Bitcoin, there's such a macro global situation going on about it. Budget for yourself to the extent of which you're in. When you're buying and selling, you've got kind of a double-edged situation going on where not only the capital gains and all the attraction you get when you've made money, but you're trying to psychoanalyze both ends of the spectrum. Whereas when you made the switch to just buying and holding, at least if nothing else, you can time your buys, but then you're not worried about the sells. You're not watching it's a good time to sell because it's high. That's all going to be a wash in the long term. But
exactly.
You're increasing your edge on the buys in the conversion from fiat to the true hard money and the only sole global asset there will be. So
Exactly. And it helps with the orange pill because, like, most of the people at orange pill to work, I was telling them right at that, I just showed you on the charts there, like 52 was an area of support and resistance. And I go, hey, this might be a good time to get in. And right as those trading indicators are flipping positive, I go, you might want to get some. And I got a bunch of people to just go, all right, I'll put $100 in. But the beauty of it is like, 2 or 3 weeks later, they're going like, oh my God, it went up to like $150 or $170. And you're like, yeah. And that's the power of it. And I said, look, don't get married to this idea. It's not for a short-term thing. But the point is I want you to see that once they're off zero, then they can start thinking about it a little bit more. They're going to be paying attention to it a little bit more. You can lead a horse to water, right? That's the best you can do. Getting them off zero is to getting the horse to take a drink and just go, all right, well, you've got a little skin in the game. But what I can tell you is orange pilling someone is so much easier if they do a little $100 buy and then it goes up right after and it stays up. Versus they get a little $100 buy. Like there's a lot of top buyers at 74,000 or whatever going, all right, fine, I'll buy it, and they get $100, and now they're just like, oh, dude, now it's down to $80. Like, what did I do that for? And the beauty of having those trivial sums like $100, $50, whatever, it's like you can still reassure them, like, hey, don't worry about it. I'll tell you when there's another good time to buy. Like just wait until I'll let you know because I'm not buying right now either. I'm just waiting a little bit because I know sooner or later the price is going to come around. And as soon as I buy, I'll let you know when I'm buying. And if you want to hop back in, maybe put another $100 in or something like that. Mm-hmm. But then if they wait and they follow that, and then all of a sudden the price goes back up and we cross 82,000, 85,000, whatever it is, wherever price discovery goes, then all of a sudden they get that dopamine reinforcement of like, not only did I trust this guy to take that little initial jump, but every time he's recommended something since then, my $200 has now become $300 or $325. And I would never counsel anybody to go all in. Like, I'm all in. I don't own anything else. Like my 451 or my 457B gone, no real estate, none of that stuff. No gold. I sold all my precious metals, everything. It's all just 100% Bitcoin. That's the only thing I invest in. That's the only thing I want to invest in. And it's still, hard for me. I mean, that's a bridge too far for most people. Right. Like most people just can't see that. And yet when they start seeing like, hey, there's power to this, if you have someone if you can get them over that line of like 1 to 3% where they're actually devoting 1 to 3%, you're doing them such an enormous benefit for their future that they won't necessarily recognize it right now. Yeah. But if you can get them there, that's huge, And again, a lot of it comes down to like, did number go up after I bought it? If yes, then I'm more likely to buy some more in the future. If no, then I'm more likely to start thinking this guy's an idiot or this thing's a scam or there's no point in doing this. The biggest thing is just preaching patience. Like, stay humble, stack sats makes a lot of sense to people that are into Bitcoin. It doesn't really make sense to somebody who just watched their $100 turn into 50. Yeah. So, but if you say, hey, stay humble, stack sats, and you go, hey, it just went to 150 or 175, you go, that's awesome. I'm glad you had that experience. Just know this could go all the way back to 25. But the point is, you want to be in on this thing. And they can, it's so much easier for them to incorporate that information if they're on a winning streak rather than a losing streak.
Exactly. I mean? Yeah. When you're say like when I've worked on orange pilling, you know, a fiat minded boomer, and they're like, you know, hey, I put some money in this, you know, it's been a month, where's my $1,000,000? The fiat mindset ingrains us in this high time preference and returns, and they see the volatility in Bitcoin and they just want to catch that high, and it's part of that addiction short-term mindset. It is hard to instill that long view on what this means and what money is. And so when people are new to it, and I've temporarily or short-term orange pilled somebody, or at least educated them, and say I got them off zero, it's a vulnerable time in a way, because if they're watching the price, they're judging it based on the language they know, which is the dollar. So if number goes down, all they see is their dollar value, and they're just thinking in terms of, you know, my dollars. It's another bridge to get to what that means. What does Bitcoin mean? Not like a stock, or, you know, something like, gee, I could theoretically cash out soon and have made money. It's just hard to get there. So it takes time. Leading up to Christmas time, around Thanksgiving, a bunch of my family, you know, variously they hear their kook uncle talking about Bitcoin over the months or years. And I'm like, yeah, I'm into it. And I just keep it cool, staying humble about it as I can. And so for Christmas, I gave a bunch of my family and, you know, and cousins and nephews and stuff, just little, kind of like open dime, little cold storage wallet, if you will, but like a Bitcoin coin with a private key inside. And I can put anywhere from $5 to $50 on the thing and give them out as gifts, and it's something tangible, and it's like, oh, it's a Bitcoin with an address on it. Here's a public key. You know, hey, look at this. Right now I can send you $5 of Bitcoin right there, and it's on your address, which is represented by this little token you have. And it's a novelty to them. Like, oh, okay, well, Bitcoin, interesting. Well, so, you know, back last fall when the price was in the 20s, it was just kind of this funny little thing, and Bitcoin had been going down for a little while, and had hit that low previously. Well, now in my mind, I'm like, okay, ETFs are coming. There's adoption happening. There's all kinds of attention going on. More lately, you know, okay, Hong Kong Chinese ETFs starting to open up about it. I saw these things coming, so in my head, I felt this additional kind of fiat assurance that Bitcoin was not going away, and there's no way for it to be regulated or crushed in a sense, but if nothing else, it was actually getting adopted by some establishment areas. So I saw that coming, and so I felt some assurance. Well, come spring here, or whatever, it's an easy thing to say, hey, remember that little Bitcoin token you got? Or you still have that? Oh, yeah. If they have an idea, for them, it was a message of, gee, back then, what do I even have? What was that? Do you remember what the price was in fiat? Yeah, well, it's worth like 3 times that. You know, 3 times $10 is whatever, but it's just that little bit of reinforced assurance that, why Bitcoin? What is Bitcoin? Oh yeah, that worked, you know.
Oh, totally, man. And you know, that's the beauty of it. It's like you can kind of make the analogy, like if you go, like I know your content on Satoshi's Militia on YouTube. A lot of it's about the Revolutionary War and you know, the war for independence and all that kind of stuff. But if we sort of trace that analogy out to like what it's like today, like people like you and me and Michael Saylor, they're like, Michael Saylor's like George Washington crossing the Potomac. You know, he's standing up there and the icy waves are whipping the boat and the guys are rowing. Like, we're probably the guys that are rowing. Maybe I'm the guy on the shore that's like cleaning the boots. I don't know. But
well, 2 and 3 years ago, he was doing the same thing, and it was like, are you freaking crazy? So he rode it out through the bear market, through the crypto shitcoin collapses and stuff. He kept to the message because he understood it back then.
Yeah, but the point being though is like if you put us in context of that back then, like, you know, we're the people fighting. We're the ones that believe in the movement. We're the ones that believe in the revolution. We're the ones that are fighting it. When you orange pill somebody like that and you get somebody off zero, it's like you convince them to put a flag up on their mailbox, you know, and that may be the level of support that they ever give to the revolution or to the movement or anything like that. They'll benefit enormously from it later on, but for right now, like just getting them to just show a little bit of support is not nothing, you know, as far as I'm concerned. And again, it's, you know, like the 3% or whatever, the people that actually participated in the Revolutionary War, the 97% were the ones that, like, if you could just get them to give you a biscuit and some gravy as you're passing through town and not, you know, throw rocks at you or whatever, or tell you how dare you fight King George or whatever it is, right? Like, those are all big things. And the fewer people you have that look at you like a lunatic, and the more people that are kind of like, yeah, I got a little Bitcoin, and they're, you know,
Yeah.
it's all generalized support for where we should be heading, or hopefully the world should be heading.
Yeah, and the bridge beyond the folks that I typically orange pill is this broader philosophy about what is money, and then also lately I've been thinking about what is the dollar, and how has it been treating us, you know, for the last 100 years? How's it been treating us lately? You get into this a lot with some of your writings, and we've talked about this a lot. But there was a very interesting article by Marty Bent with Truth for the Commoner. He writes a lot of great articles, and with the help of others, they have regular podcasts, but I follow them. And he wrote an article just recently when we think about, you know, talking to folks whose largely their mindset is, their language is in the dollar, and you're basically translating for them what that means from the dollar to Bitcoin versus that dollar, how they compare, and what the dollar has been for us. He had a really interesting point in his article stating that, so at one level you could say, with my videos, Satoshi's Militia, I'm saying that Bitcoin is pro-American, it's patriotic, it's good for the people, it is empowerment and security. Bitcoin could be national security in one regard if it was properly absorbed into, you know, economic planning and financial treasury things.
Yeah.
Not only is Bitcoin pro-American, Marty was saying that the U.S. dollar is anti-America. And if you want to indulge me for a moment, I can read a thing that he wrote in his article about the dollar, because I'm always talking with people and they're translating everything I'm saying into the dollar. And they're heavily invested in the dollar. They're paid in the dollar. They save in the dollar. But the dollar, as it melts, we can see it as inflation or shrinkflation, or we experience it in different ways. But how is the dollar anti-America? You know, the Federal Reserve, that's federal. It's a reserve, right? It's American, right? I'm going to read part of what he says here, and I'll try to keep it swift. But what he wrote was that, so the late Supreme Court Justice Antonin Scalia would ask students, you know, what do you think is the reason that America is such a free country? What is it in our Constitution that makes us what we are? If you think the Bill of Rights is what sets us apart, then you're crazy, because every banana republic in the world has a Bill of Rights. For example, you know, Russia has a great Bill of Rights. Every president for life, dictators say, has a Bill of Rights. Of course, these are just words on paper. As the framers would have called it, it's a parchment guarantee. So Scalia would go on to explain that the United States has attained the level of freedom that it has, or perhaps did have, due to the governance structure that the founders set up. It was designed with an embedded gridlock between three branches of government so that it would be hard to change things. Because when governments change things, it's usually at the detriment to the individual and to their sovereignty. Gridlock is what the framers believed would be the main protection of the rights of the individual. It was gridlock by design, and the primary protections in place, they were meant to prevent the centralization of power under any of the three branches So to prevent the complete centralization of the money supply is the single greatest force undermining the intended structure. Effectively, when you have a centralized money supply or the Federal Reserve able to just print money and pay for things, it undermines our branches of government, our separation of powers. You can short circuit the separation of powers because, hey, I got more money heroin for you. The ability to print money at will allows the government to fund itself via unfettered debt expansion functionality funded by the Federal Reserve. The framers intended for the funding of government to be by the consent of the governed, we the people, principally through taxation or otherwise actually paid for by the public via real money, not something that can be created out of thin air. Alexander had a quote here. He made a report to the Congress in 1790. He said, "The stamping of paper is an operation so much easier than the laying of taxes, that a government in the practice of paper emission would rarely fail, in any such emergency, to indulge itself too far in the employment of that resource, to avoid as much as possible one less auspicious to present popularity." Basically, and I'm plagiarizing from Marty Bent and his podcast and his writings here, but I want to reiterate the point that so many people are basically in the mindset indoctrinated, gaslit by the fiat regime, the Federal Reserve and our dollar system, that's just a given. That's just how it works. The dollar is American. America is the dollar. And we forget that the Federal Reserve is printing this in such a way that, Congress wants to, without even declaring war, we want to just we want to provide arms or money or pallets of dollars to, Israel, Ukraine money laundering. Where did it go in Iraq? Where did it go in Afghanistan? I mean, who knows? But we can pay for all these things. We can subsidize pharmaceutical companies. We can subsidize this or that, whatever we want, without having to go to the people and say, hey, will you float a bond? You want to buy Liberty bonds? Don't need to anymore. That's part of what is this an uphill battle when I work on orange pilling with people, is that their linguistics of money are in the dollar, but they don't know what that means. And what I've been thinking about just lately are the nature of the dollar really being a drain on America and on society generally by giving us a higher time preference, shorter view on what savings means, and making bad decisions, honestly, or that you can just pay for stuff without consequences, we think. I feel like we run out of rope at some point. You've printed more money, you've paid for more stuff. After a while, it's so beyond, salvaging that the bigger plan is whether it's CBDC or otherwise, it's the new dollar. Any thoughts on that?
Oh, certainly, man. Well, I mean, the funny thing about a lot of the ideological stuff that goes around government and all that kind of stuff, like the founders, they say, well, gridlock is the intention, and that's correct, 100%. I mean, they made a 2/3 majority to change the Constitution. They put that in there for a reason, because they knew they'd almost never be able to cross that. And that's held true to this day. The trouble we always run into with these kind of things is clearly the system was subject to corruption, right? Like, it's self-evident that if they could set up a central bank, and they tried, since the founding of the country, they tried to set up central banks, and it took a lot of conscientious work to prevent that from happening. And sooner or later, that you're just going to lose to those forces, because expedience is always going to win out, and convenience is always going to win out. And what we've created now is such a distortion on any, when people talk about free markets and capitalism, and it's all just nonsense. I mean, there's no real basis in reality for any of this kind of stuff. To say this is a free market is preposterous. To say this is capitalism is preposterous. Just like to say Soviet Russia was communist and that was, a state-controlled government. That's not how that worked. I mean, that might be the headline. That's the 5-cent history book, but that's not the reality of how human action has worked through the last 2,000 years, 1,000 years, 500 years, or even the last 100 years. I mean, none of that stuff sort of pans out. And at the core of it, there's two ways you can look at the world, right? And I think most people in the West especially look at the world from, they assume bad intentions, right? When something's not going the way they think it should, they go, the people that are doing this are evil, they're doing this on purpose, and they're doing it for self-gain. And it's obvious why it looks that way, right? Because things look like that's how it's working. But if you flip that script around in your head and you go, well, what if everybody that's doing anything is doing it with good intentions? If you assume good intentions, then the way this stuff looks a lot different to you, right? And you go, well, are there any problems with the fiat system? Clearly. Do you think anything like any of this stuff that we're doing right now exists without that fiat system? Almost certainly not, And if you want to look at societies that develop without those sort of principles in place, like private property and land ownership and all these things that sort of underpin our entire system, you go, yeah, they live in the jungles of South America and they go and gather fruit and they shoot monkeys with blow guns and they just kind of live their egalitarian lifestyle, right? But they would think it preposterous to say, this is my land, that's your land, I'm going to put up a fence here, and this is, because that's just not how they operate in the world, and that's not how human beings have historically operated. It's, things like animal husbandry and agriculture and things like that start kind of bringing some of these ideas into fruition, and then who owns what, and who can you exclude from things, and who can you not exclude from things. And then somewhere in the middle of all this, people are trying to make that structure work, right, on some level. And whether it was the people that formed the central bank back in 1913 or the people that formed the Bank of England back in 1627, they were trying to make the thing that they had in front of them work. And it's always terrible. And it never works out well because a lot of these things are fundamentally flawed. So how you navigate around that is tough because our Constitution and our founding fathers came up with a structure they thought, hey, this can withstand the forces of corruption. And it only took about 150 years for that to be revealed as false. They go, nope, it was corrupted almost immediately. They tried to corrupt it within the first decade by doing the first central bank, and then they tried the second central bank, and that, but these are all corrupting forces that have been in play since the beginning. But the point of the people that we call corrupting forces are also people that were not sitting there going, yes, I'm an evil mastermind, I'm going to take over the world by putting up the first central bank. They're going, this is a better way to do things, dum-dums. You guys need to do it this way. And you could trace that all the way up to shitcoiners and everything today. Like, there are people that are manipulating things and trying to do things for self-gain, obviously. But the incentive structure favors that right now. And that's one of the things I think is great about Bitcoin because it helps realign those incentive structures. That's the title of my book, The Great Realignment, because it's the first, and quite literally the first thing in human history that has the potential capacity to fundamentally realign those incentive structures so people are all working towards the same generalized goal from the same generalized set of rules. Whereas the others, they just make it too convenient, Right. And it's the difference between competing to get to the end of the goal versus cooperating to get to a goal. You go, hey, I'm going to keep you from getting that flag versus, hey, let's all figure out how to get that flag. And that's kind of what I'm, orienting all of my work towards right now.
Yeah, the Great Realignment at one level, on an economic level, can be about money and large money systems. And on a human societal level, there would follow a great realignment in time preference and what money means to them day to day. And it'd be like before there were credit cards, we just knew you got what you got, you can earn what you earn, you can save what you save and feel some assurance that savings holds. And then along comes credit card. And you say, okay, well, it's just a useful tool. Why not have one for hard times, for emergencies? And then over time, the psychology changes about, wants and needs, in the sense that, well, okay, so in a hard time, yeah, we really need to do this now, and thank goodness, well, we have a credit card to cushion that. Okay, useful tool. And then over time, you need that credit card for more and more of, say, perhaps your wants. And I'm not judging credit card use. I use credit cards. But what's happened with the Federal Reserve and the U.S. government, like a drug addict, is we can't not have our next hit. At this point, everything we're trying to do at this point, or pay for, or budget for, or sell our debt, and bail out Japan, and all that. It's relying on the money printing, or printing the money, having debt, selling that debt. It's not just kind of a tool in hard times, or an option, as needed, or for certain goals. It's just all the time, more than we'll ever afford. And so it'd be like, would you invest in a company that was like $1 trillion in debt and made $1 million a year? Hell no. But that's kind of like the norm right now. How we have to pay for things, or just send money onward to like foreign shores, or to fund what wars or what efforts everywhere globally, because it's the dollar. And what does that mean? Dollar from what? Well, because we made more, because we needed it now. And then next month when we need more, we're going to have more. And then next year when we need more, we're going to make more.
Right. Well, I mean, part of the trouble, and I think where people get tripped up, there's two things that human beings struggle with deeply. And on a fundamental level, human beings have a lot of trouble with complexity, and they have a lot of trouble with exponential numbers, right? And that's true of even people that work deeply with complexity and exponential numbers. Like, you go talk to physicists, they routinely undershoot their calculations, right? And if you talk to biologists, they routinely screwed up, because exponentials just, our brains aren't built to process that kind of information, nor are our brains built to process complexity, right? Like, there's a reason people are superstitious. There's a reason people believe in, air gods and sun gods and all this kind of stuff, because the amount of complexity that goes into like trying to understand what that means. Like, hey, there's this great big ball of nuclear gas that is continually burning in the middle of our galaxy, and that thing is emitting these forces that are swirling us around. I mean, like, to get some caveman to wrap his head around that, it's not going to happen. There's way too much complexity there for them to fathom. And so when I talk about complexity and exponential numbers, you go like, people go, hey, we need to smash the state. And I go, you don't understand the complexity that is involved in creating the state. You go, hey, we need to, defund the police. You go, you don't understand the complexity of what society operates like on that level of why there is a police force, because there's never been a society in the history of mankind that didn't have some sort of policing agency, because there has to be some sort of mechanism of solving problems that doesn't involve, like, if you just have everyone trying to figure out their own solution to things, it doesn't work. It's nice to have a central body to go, hey, there's this thing happening that shouldn't be happening right now, and someone should really do something about it. It's great to have an authorized force of people that come in and go, okay, we're the people that deal with that, right?
Right.
So, but explaining that to somebody is a difficult task. The reason I bring up exponentials is, if you look at the derivatives market, that started the over-the-counter derivatives market, and people started becoming familiar with them with mortgage-backed securities and collateralized debt obligations and things like that in 2008. What they don't really comprehend is that had an exponential growth curve. It went from like a $60 billion industry in 1996 to a $600 trillion industry by 2008. And even the people that were creating these derivatives, they created that exponential monster that they did not understand at all while they were creating it. And it wasn't until the exponential growth went whoop, that they went, oh, everybody took a pause, because, they were bundling these mortgages and whatnot. And all of a sudden, one little pin came out of that Jenga puzzle, and everyone looked and went, what have we done here? Oh my God. Like, this isn't, how how did we get here? Because they didn't understand the exponential curve of the thing they were creating. The incentive structure that was in that was guaranteed exponential growth in that derivatives market, but there's no counterparty to any of that risk because of the exponential growth in it, right? So now, if you go back to what I was saying before about, looking at things with assuming people have the good intentions, you go, what happens when you're a group of people, central bankers, the treasury secretary, whatever, and you look around and you go, hey, we didn't notice this exponentially growing disease, this exponentially growing cancer in our financial system. And now it's that wake-up moment when you go, oh my God, it's metastasized throughout the entire economy.
Yeah.
And the patient is going to die. We have to do, and if the patient dies, then everything stops. Electricity gets turned off, money gets turned off, the entire global supply chain stops. Everything stops. Overnight, we're going to go, within the next 5 to 7 days, we're going to be nothing. You're going to go to the store and there's not going to be anything there. You're going to go to turn on your lights. The lights are not going to come on. The water's not going to flow. Like, the whole world stops running, and we got to figure out how to rebuild from zero. And that is not a very tolerable outcome, but it's because of an exponential growth and because of the complexity that they didn't recognize and they didn't see until it was obvious and right in front of their face. And that's still the same problem that they have right now. That problem didn't go away. They didn't just magically fix it. And they keep printing all this money, and you keep watching all these things go wildly out of control and spin left and right, and people are just like, markets are going up and other things are going down, and the bond market is, like, interest rates keep climbing, and I mean, these stunning collapses in like stock prices, and then the stunning rebounds, and I mean, all this volatility and madness going on out there is a symptom of the way it's showing you, like, the fixes aren't working.
Yeah.
But they're going to keep trying to apply them because the alternative is catastrophic, right? And so Bitcoin, again, is that one thing where you look at it and you go, what mechanism, what tool do they have to try and paper over this mess? Because they've created a $500 trillion black hole in the economy. How do you paper over that? Well, you got to fill it up with a bunch of paper.
Yeah.
But if that paper isn't backed by anything, the whole illusion falls apart, everything falls apart, and then we end up in ANCAP land, and it's chaos. I mean, people are literally eating each other within a few weeks. So you go, where can you funnel all that massive inflationary pressure that has to happen without destroying everything else in the process? You go, what's the one asset that can absorb $500 trillion worth of inflation? You go, Bitcoin can.
Yep.
Can the housing market do it? No. Could the stock market absorb 500 trillion extra dollars? People go, that's insane. But Bitcoin, you go, well, hey, now each Bitcoin is worth, $50 million. You go, why not? I mean, there's no, like, you don't have to match the revenue to it. You don't have to do any of this kind of stuff. But it can help slowly sort of, and I'm not saying it's going to $50 million, and I'm not saying they need to paper over 500 trillion. What I'm saying is this system is complex. There is an exponential problem that they've only recently, and by recently, the last 15 years, they figured out, hey, we need to do something about this, and there's no good way to fix it. I go, well, there's one asset out there that maybe, can sort of get us through that without everything turning into, a puddle of ANCAP fantasy land. And even the ANCAP fantasy people, they're going to, if they get confronted with that reality, they're not going to like it because most of them are going to be just as dead as everybody else. Right. There's not good outcomes that come from that, And especially if you're a big, fat, lazy American who's been eating Doritos and Cheetos and Taco Bell and you're, 100 pounds overweight, you got to sleep with a CPAP and you need all these medications and your, carnivore lifestyles, all of a sudden, like your freezer doesn't work. Like all that stuff goes out the window.
But you got your guns and yeah, right.
Right, yeah, but I got some guns, and I got enough ammo to last for one fight.
Yeah.
So you go, well, okay, if you think that's the path to freedom, you're going to somehow bunker up and just save yourself from the invading hordes. Like, it's just not how the world's geared. Yeah. There's a few ranchers that live out in the middle of nowhere might pull it off, but, you live anywhere near a population. If you have a day job, you're not going to be one of those people,
Yeah. I've got an ANCAP little anecdotal story to tell about that. I had a conversation with my mom just this morning about a book she was reading. Let's see. A libertarian walks into a bear. So yeah. She's reading this book, and for her, I mean, she's peripherally aware that, okay, I'm into Bitcoin and I'm a patriot. And as a mom, moms worry about their kids and wants to learn more, and also, wants to make sure I'm not going too crazy. And so for a lot of people, they view something like Bitcoin as, okay, if it's not just speculative lottery tickets, and it's something real, there's something there. What does that mean? For someone who would like to trust their government and rely on established processes as they are, it can be perceived as a threat, as you see with a lot of establishment government approaches to Bitcoin. Bitcoin appears to be a threat to the system. And there can be some black and white thinking there, where what they see is, well, you either have what we have, imperfect as it is, or you have anarchy. Or what is that? Scary, like, take down the system, and then what? We don't have our police. Systems fall apart. We don't want that. I get it. What your book gets to, and what you just spoke to earlier, is that the Great Realignment is more of that transition into what works versus take down the system, collapse the system, us versus them, attack the establishment. We're doing this on our own, damn it. We're armed and we're fearless, etc. The book, a libertarian experiment, you might say, in New Hampshire, where a group of people got together to create a community and to be self-reliant and very quite libertarian. And they suffered from all the things that societies do suffer for when you create a new tribe or a new community with new principles,
Yep.
Where they ran into realistic problems where you get people either not entirely pulling their weight, or not entirely getting along, or who's taking out the trash, who is policing the little stuff. They ran into problems they're living out in the woods, and they had bears. They had bear problems. Now, I haven't read the book. My mom was describing it to me. But they ran into these human problems of needing to have organized society to collectively work together to stay safe and healthy. And they didn't handle it very well. And for her, the title of the book sort of lets you get the sense that, libertarianism, even for a small community, it didn't work so well. Just try to have a libertarian government or a libertarian society. You'll have pockets of areas that work, and then broad swaths of area where, like, good luck. You're getting old. You can't afford stuff. You don't have kids. You starve. Sorry. Yeah, libertarianism.
Right.
And it's like, I get it. But what we're talking about here is not this ANCAP or libertarian, like, that's just going to fix everything. The Great Realignment is that what we have now adjusts steadily, gradually, and then say less gradually, toward what works. And it doesn't have to be catastrophic. It can just be that things just seem to be getting better and better and better because there's an outlet into an asset that holds its value, provides security, and isn't just like, well, other than the dollar, what is there? I'm no rich person. Do I need to get into real estate? I need to be a rent seeker? No. If you have an asset like Bitcoin, that can provide that shift in a very gradual, digestible way that changes society without calamity. And that in little pockets that's happening now, but as it continues to go, it's not a war that's being fought here. It's a shift that's happening steadily and perhaps inevitably. And so there's feelings like, well, geez, capitalism's not been good. Capitalism's been bad. And it's like, we don't have capitalism. For my mom, it can often be, inherently political. You'd see it as it's the political parties disagreeing, or it's either that way or that way. And I see them both as being dysfunctional and both sucking off the teat of money printing. If we have Bitcoin and we can shift away from that, the problem isn't that Bitcoin is a threat or that libertarianism or some sort of anti-federalism is the answer. It's that we have broken money. If our money's broken, then all these symptoms occur. And then so the idea of fix the money, fix the world comes into play. I was describing to my mom about how I see it less as a political disagreement, as more of a foundational society we have built based on broken money. And she's kind of seeing that, where for me, I think she's worried that, I'm on one side or the other politically. For me, it's not political as much as it is grappling with an economic language we speak in and based on a broken money.
Yeah, but I agree with you 100%. I think it's funny. I kind of want to read that book now. I mean, it's predictable, right? Like, you can just look at that and you go like, and I was a hardcore libertarian. I mean, I ran for office as a libertarian, so it's not that I came from this, like, judging from the outside. Like, I came from the inside, and, it was right after law school I started calling myself a reformed libertarian. Like, I kind of realized, like, hey, the world's a bigger place, and a lot of this stuff is just as fantastical as the Communist Manifesto. You just look at it and you go, well, that's great if everyone agrees and everyone gets along, and that doesn't always happen in life. I mean, it just, and there are reasons for the structures that we have. And I would even trace it further back than just broken money. I go, it's just kind of a broken structure. Like a lot of the notions that we take for granted and that people just assume are like, well, this is the way it's always been. Like, it's always been that this is my piece of land and that's your piece of land. And I go, yeah, but that's not how every society on Earth has developed, and that's not how every society on Earth evolved, right? And yet it ends up in these power structures anyway. And it especially ends up in power structures like this if you prioritize things like, private property, land ownership, et cetera, et cetera, et cetera. But those are rooted in very Euro-Christian ideas. And not to say that you want to get rid of private property, because there are merits to that system, and there are merits to this ideology, and there are merits to allocating things this way. And yet when it comes to things like dispute resolution and, who takes out the trash and who deals with bears and, all these kind of things, they're functional problems that as societies expand and grow out, because there's this other group, what are the ANPRIMs, I guess, the anarchist primitives, and they want to go back to hunter gathering, and it's just like, well, it's hard to support 8 billion people doing that, because there are limitations on resources if everyone goes out and gathers stuff, and especially if you tack on top of it like private property and right by seizure and things like that. You go, well, I'm just going to gather up all the buffalo. I'm going to gather up all the deer, and then nobody else gets deer and only I get deer. And it's like you end up with a power structure anyway. Yep. And so the ANPRIM thing doesn't work. And so there's that duality of man that's eternal, where you kind of go, we like being alone. We like being able to be individual and think our own thoughts and do our own thing. And yet we also need other people around us. It's a healthy, essential part of our biological existence, right? So there's always the need for group, and then there's always the need for individualism. And it's, the entirety of human history is traced out trying to find that balance and strike a balance between those two and figure out ways to allocate resources and figure out ways to make sure that everybody is successful and survives. And that's, survival of the fittest is making sure we can pass on our genes, and you can't do that if all your babies are dying, right? And it's funny, like Lynn Alden just put out this really, really great animated video about broken money. Like, she sort of summarizes her book. And it's almost hilarious to me that she makes, in that video, very early on, she makes that same logical error about, like, well, we used to barter, and the problem with barter is, like, you can't divide things, equally, and it gets too hard to trade that way, so they came up with money. I'm like, that's not where it came from, And she's brilliant. She's genius. In no way am I her intellectual equal, and yet I can also recognize this error in there. I'm just going to go, you're missing a big part of this picture.
It's some of that Adam Smith foundation that we presume about money. Yeah.
Because everything she quotes and cites from and reads from is all predicated on that same foundational error, that same foundational myth of, like, well, it all started with barter. And she does talk about things like fractional, or like, social credit and the ability to trade via ledgers and things like that, and talks about that breakdown, but misses that great big huge component of, like, the fundamental reason for commodity currency money, things like that, that especially here in the West, can't speak to, like, what happened in Egypt 5,000 years ago, but we don't live in the system that existed 5,000 years ago in Egypt. We live in the system that was created 500 years ago in Europe. That is the system that is the underpinning of the entire global monetary system right now, is the system of sovereignty, sovereign territorial rule, and sovereign issuance of currency. That all is relatively recent. It's last 500 years that we've been operating in that. These are refinements on that system that we're existing in right now. And so that is the system we need to speak on when we're talking about money today. Not money like the pharaohs used it, not money like the Aztecs used it, not money like any other culture on planet Earth. It's sort of irrelevant to the discussion that we're having right now. And the foundational myth of that is that barter turned into, currency, and currency turned into credit and debt, et cetera, et cetera. And it's simply not true. The reason for money, the way we use it and look at it today, was to extract taxes from people. And that is such a fundamental shift in understanding why everything is broken right now, because it's premised on something. Gold standard had the same problem. Commodity money like gold and silver coins had the same problem, and just taxing people by going around stealing their pigs had the same problem. It's like there's this idea that there is a group of people that are allowed to come and take from you. And that's where the libertarians get tripped up, because they go, well, this is fundamentally wrong that people can come and take from you, so no one should be allowed to take from anybody. And you go, well, then you run into the other problem of there's community resources, community goods, and things that have to happen collectively, or else we don't get to all operate together. And you're going to end up in a power structure in a libertarian system just as much as you ended up in the same power structure that you did under communism, that you do under representative democracy.
Yep.
But at the fundamental core of all this is that monetary unit. You go well, how do we regulate trade? How do we mitigate trust issues and all that kind of stuff? And if there's one person that can control that, it blows everything up. But if you take that one component out and you go, hey, well, here's this one thing that nobody controls, you go, well, there's a possibility there. That doesn't mean we're going to fix all of these problems. We're not going to come up with solutions for all the taxation and how you pay for roads and who defends against bears and all that kind of stuff. But we have a pseudo-functioning system in place already. If you can kind of keep the good parts of that without blowing up everything else, that I think is a net positive for humanity. And I think Bitcoin affords us an opportunity to do that. So it's a long shot, and I recognize that as well. And yet I go, that's a noble purpose. That's a noble thing. And so when Saylor's talking about as a treasury reserve, this is an important thing. And I go, yes, 100%. And when the big blockers and the commodity, the currency money people, they get their panties in a bunch about that because it's censorable and, who's going to control it, yada, yada, yada. And I recognize those fully valid concerns. And there's still that other idea of if you look at some of the biggest critics of modern Bitcoiners, people like Michael Saylor, Eric Boskule is a guy, I hope I'm pronouncing his name right. He wrote in his book, he thinks Saylor's a moron. He looks at the guy and goes, he's an idiot. And he lists out a bunch of very detailed reasons why he thinks he's a moron. But in his book, he devotes one sentence. He says, as a treasury reserve asset, I don't see any good use for this. And I go, well, that's the part you're missing right there, buddy. But otherwise, he's got some very valid criticisms of Bitcoin, and we ignore those at our peril, because it's one thing to sit in your bubble and talk to each other about how great everything is. It's another thing to ignore critical voices that might have a point. And so we need to be open enough to look at those voices, hear them, incorporate them, understand where they're coming from. And even if we choose to dismiss them later on, just to call someone like Eric Boskule, who's been working in the space for more than a decade and has been a key developer in the Bitcoin space, to just go, this guy's an idiot, doesn't know what he's talking about, is just as disingenuous for him to look at Saylor and go, this guy's an idiot, he doesn't know what he's talking about. It's there's truth in between those two things, and it's imperative for all of us to kind of find what that center path is. And I think Treasury Reserve Asset is one of those narrow paths where I hope, I pray that people can coalesce around and get on board with, because it kind of works the best given all these competing interests and all that complexity that you were just discussing in that libertarian compound. They ran into complexity and they just went, oh, we didn't think about any of these things, just like the communists ran into complexity and they went, oh. And they ended up starving 40 million people, and I think if you had a libertarian government, you'd end up starving 40 million people that way. So, it's finding the path between the duality of man that is the tricky part. And as a treasury reserve, Bitcoin, I think, serves that role probably better than anything man's ever invented,
Yeah, so in these small societal bubbles, there have been very successful libertarian experiments, very successful communist experiments. And then you try to extrapolate that out to, okay, we're going to run a country like America based on those principles. And then you're trying to we got a bear problem. or we got enough people who are irresponsible or criminal, subjugating people to things here and there. How do you grapple with that? It's hard to think of the big picture, applying certain first base principles that work in these microcosms to a very large, complex system that changes or faces large challenges. So for me, the political part of things it's just so not black and white. What your book, and particularly when you talk about money and the origins of it, the taxation, chapter 1 about money, opened my eyes to the origins of money and things that even someone that I so wholly respect, like Lynn Alden and her video on money, that there's some base things there about money that we all still presume are just the way they are for why they happened, and that we don't fully understand to this day. But that's where I think with your book talking about the Great Realignment brings sense to that from the very beginning.
Oh, I hope so. Anyway, we'll see if I can pull it off. I guess
I've found it quite educational. I've learned so much. Like I enter it thinking I know a lot about this. We've talked about it, and then I'm reading it and I realize, wow, paradigm shifts in my brain. You bring that knowledge to where Bitcoin could be bringing us in a very gradual and then less gradual way that is not catastrophic in a way. What Bitcoin could happen for society is that we just start to notice things getting a little better and accessible to people of all walks of life in little ways. Like things are just getting better now, or people aren't cut out, or you don't have to be a rent seeker. You don't have to hoard stuff. You don't have to buy it now. You've got that approach, and then with my videos and the connecting the sense that Bitcoin is pro-America, America should be pro-Bitcoin, bringing some spirit to the fact that this isn't a war, this isn't an us versus them, this is just simply where I want to see all of Americans and all of humanity in that regard work towards what is hope. I see it as a positive future, a hope for the future, and we can't do that when we have a money that's un-American. I feel like Marty Bent's last post and podcast about the dollar, Bitcoin being pro-America, the dollar being anti-America, gets to the root of the problem, which is money.
Yeah. Well, and I agree with you. I think ultimately what I would like to see is the world get to a place where it is hopeful for everybody, and that not just us in America get neat toys, but, kids in South America get neat toys, and kids in South Africa get neat toys, and kids in Sub-Saharan Africa get neat toys, and kids in India get neat toys. And it's I think the beauty of Bitcoin and all these different approaches and ideas around Bitcoin, like the ultimate thing is there is something better out there that can help fix a lot of problems. Whether it's, using it as a medium of exchange, or using it as a treasury reserve asset and savings technology, store value, etc., or something else as a sovereign base layer, however you want to frame it. And Jeff Booth I think it was Jeff Booth or Samson Mao, they said, look, everything you say, everything you do that helps support Bitcoin is beneficial. And part of that is because not everybody's going to see things the way I do, right? Like right now, we just talked about it. Like I am opposed to Lynn Alden's view of the origins of money. I dicker with her on that origin story. And there's going to be a lot more people that probably agree with her assessment of things than mine. And yet there's going to be somebody out there that's going to hear me and go, oh, okay, well, I kind of hear where this guy's coming from, and Bitcoin's the answer. And Lynn Alden is going, no, money came from here, and this is why Bitcoin fixes, but Bitcoin is the answer. I go, yeah. And everybody across the board, you're looking at it going, this is American, this is pro-America, this is what America's about. Bitcoin is the answer. Someone's going to resonate with what you have to say about it. Someone's going to resonate with me. A lot of people resonate with Lynn Alden. A lot of people are going to resonate with Saylor. A lot of people are going to resonate with any number of voices out there. But all collectively, they're all pointed at one thing. And it's not, this is the answer, communism. This answer is, we need to raise more flags. This answer says we need to raise taxes. This answer says we need to ban guns. This answer, people just got answers pulled in all different directions. They're like getting quartered. And right now, Bitcoin is a singular point of focus where everyone can kind of go, we all recognize there's big problems in the world, and they're coming from a lot of different angles. And the more people that can get on board with the idea of like, hey, there's a singular focus that you can put all of your energy into that goes, hey, this is going to help everybody. And a central banker can come to it and look at it and go, that might help us. And BlackRock can look at it and go, that might help us. And I can look at it and go, that might help me. And you can look at it and go, that might help you. Everybody can start looking at it. And if everybody, that gives you that sort of collective action kind of thing that is so missing from the world right now. It gives a collective point of focus, and it still allows for individual expression of that, how it works. And that's also very democratic and like how it gets pulled and parsed out and how people build on it and build around it and structures they create around it. There isn't one unified answer to like, this is how you solve all of 8 billion people's problems. What you can say is there is a foundation for building on top of things where you can try other approaches that don't involve the central control of money. And that's huge, you know. So,
yeah, so our journey up the mountain may all be starting from different places, different trailheads, different point of origins and viewpoints. And as we navigate our way up the top of the mountain, I believe that when we get to the top of the mountain, the destination is the same. We'll hit the peak of the mountain. The view from the top of the mountain is the same. And that view is that Bitcoin is hope. And Bitcoin is the first money technology we've ever had, that can answer all these questions and solve these problems. So all of our path and journey up the top of the mountain may be different, but when we get to the top, I think the view is the same. So it's less that we're arguing against each other. It's just we have different viewpoints, origin stories, but we're all going the same direction, I think.
Yeah, exactly.
We'll all get there.
Yeah, we're all walking up just different trails, but like you said, the destination's the same. So
Yep.
I think it's cool, man.
Cool. Well, with that, I think we can wrap up this episode here. I appreciate the time. We did this one virtually. We're in different locations today, but we sorted out some of the technological challenges here, I think, hopefully.
Yeah.
Doing it virtual, but good episode. Thanks, Daniel. I look forward to more of your writings. I'll be putting out more videos as we go. And with that, thanks for joining us for episode 3 of Bitcoin Liberty Live.
Yeah, awesome, man. It's good to see you again. And next week we'll be in person. So, yeah, thanks, everybody, for all 3 of you that might have watched this.
Happy Mother's Day tomorrow, everybody.
Yeah, happy Mother's Day, everyone. All right.
Bye.